The market is getting ready for the biggest Fed rate hike since 1994. And interestingly enough, it's possible this time round that a bigger rate hike may be better for investor sentiment than a smaller hike. Up until now, investors have been desperate for the Fed to do less with respect to monetary policy normalization. Indeed, the lower rates are, the better it's been for equity market valuations. But with inflation on a rocket ship run in 2022, there is now a greater risk that out of control inflation will be a lot worse than higher rates. And so now that this reality is perhaps setting in, we wouldn't at all be surprised to see the market relieved with a 75 basis point rate hike later today. The consensus heading into the decision is that the Fed will hike 50 basis points, but since last week's hot CPI read, calls for 75 basis points have been very loud. And the reality is this: it's always been about the market reacting to Fed decisions relative to what the market has been expecting. If the market is indeed now leaning more towards 75 basis points, we may not see the risk off reaction that one might normally expect in such an outcome. Investors may actually find comfort in the Fed getting more out in front of the inflation problem, which could make things that much better going forward. Of course, we're not completely confident that 75 basis points will inspire a risk on reaction. All we're saying is that now, more than ever, a move to more aggressive policy normalization is likely to generate a more favorable market reaction than it had in the past. With that said, the same logic applies if the Fed only goes ahead with a 50 basis point hike. Normally, a hike that leans more to the accommodative side would be taken as a big relief to investors. But in the current market environment, we wonder if investors will be very worried about the Fed not having done enough, which could trigger an even greater round of risk off flow. It's a tough call today as far as assessing market reaction goes. And the important takeaway here is that there has been a shift in thinking, which could make the outcome different than what we've grown accustomed to. If we had to make a call, we would say that a 50 basis point hike could open an initial risk on rally before the market sells off again, while a 75 basis point hike could open a fresh round of selling in stocks before the market recovers on optimism that the Fed may be doing the right thing and getting inflation under control. That's all for now.